Thank you. Okay, morning everyone. Recording, brilliant. Thanks, Maggie. So we are recording this session. If you don't want to be recorded, please turn off your video, rename yourself, and perhaps mute yourself for just a little bit while I spiel and introduce. And whilst I spiel and introduce, Maggie's going to pop some forms in the chat. So if you haven't filled out an enrolment or an equal opportunities form, please would you do that? My name's Anne-Marie Pope. I'm the coordinator for the Welsh CSA Cluster for Social Farms and Gardens. For those of you that don't know, Social Farms and Gardens is a UK-wide organisation, and we provide expert advice, support and a free membership scheme to support communities growing in sustainable ways. You can join us as an organisation, and we support an almost 1,000 strong movement of community growing organisations. So that's allotments, community gardens, community orchards, CSAs, Keep Wells Tidy, food growing farms, incredible edibles, controlled environment agriculture, city farms, edible playgrounds in Wales. And we also run in Wales the Community Land Advisory Service. We've got lots of resources and webinars that are available on the website. There is more available to members. It is free to join. So if you're not a member, do join us. I'm just going to pop the joining link in the chat. There we go. A big project at present is our Resilient Green Spaces. So we've had rounds of support for allotments, food hubs and orchards. There's more coming for allotments and orchards, and we're partnered with organisations like the Open Food Network, Land Workers Alliance, Cardiff Uni, Gwynedd Council, Shared Assets and Lantras Tuffy Cymru. For this community supported agriculture support, we provide resources, sessions like this, newsletters, monthly newsletters, so we can send you a link to sign up for that if you'd like, one-to-one sessions, specialist planning advice and resources. There are certain processes, but if you want CSA specific support, please just get in touch with me and I'll post my email in the chat shortly. We're partnered with Tuffy Cymru to provide community supported agriculture support in Wales. Tuffy Cymru is run by Lantra, who work with the commercial horticulture sector in Wales. Tuffy Cymru have a huge amount of project resources on their website. It's all open access. They've got various networks. So there's edibles and ornamentals. There's pumpkin and squash, soft fruit, veg seed, future farmer. Again, there's lots and lots of webinars and videos all available, and it's really useful for you to sign up to get any tailored training through their business review. So I'm just going to post a link to Tuffy Cymru's Knowledge Hub in there. And if you want some extra tailored support, you can carry out their business review. Oh, that's not linking through. Perhaps Maggie could find a link for that, the business review, and post it up. And if you want any support with that, then please get in touch with me. There's also the UK CSA network. You can join there as a member. That does cost, but there's lots and lots of support nationally. And I will post their link in there. So have you completed your equal ops and enrolment forms? Thumbs up? Excellent. Thank you very much. That's marvelous. I'm just going to hand over to Maggie, who is Social Farms and Gardens Wales team communications guru, all things social media. Maggie is excellent at. So if you're making any posts, tag us in and Maggie will share. And we're just going to run a quick poll. Maggie, do you want to?
Yeah, that's quite a build up. Just going to bring it back down to earth now with this poll. Just a quick poll to say why you're here today. And I'm just going to launch that now. Just leave that on the screen for a few minutes.
I can't answer, Maggie. Is that because I'm a
I think that's probably because you're, the host.
Damn.
Missing out.
I am. Okay, I think that's probably,
Yeah.
yeah.
I'll just share those results quickly. So fundamentals and managing.
Great.
Today.
Great.
And then I'm just going to pass over to Ruth, who is the director and all-round finance lady for Cae Tan.
Hello, hi everybody. Yes, my name is Ruth Evans. I'm a director of Cae Tan. I've been involved since the beginning, and I'm a qualified accountant many years ago before I had my children, who are now very grown up. So I do the finances for Cae Tan CSA, which includes Big Meadow, which is a separate CSA project, but it's part of Cae Tan Limited. I also do Coed who are a little community tree nursery here in Swansea, a forest school based here in Swansea, and a couple of solar power companies, Gower Regeneration and Gower Power. So they're all either, they're all social enterprises or perhaps a charity as well. So that's my background over the last 10 to 12 years. I've been working for, very much doing finance in the third sector for various small organisations, although Cae Tan is getting quite large now. It's not as small as it used to be. So I'm going to run through a PowerPoint presentation on CSA finances. I'm going to share my screen and run the slides. Once I do that, I can't see you. So if you've got sort of questions that you want to ask as you're going along, either put your hand up, because I think Anne-Marie and Maggie will be able to see you, or put something in the chat. And then I'm quite happy to stop as we go through and answer questions as we go along. And then we've got quite a lot of time for discussion at the end. So with longer questions that need a bit more discussion, we can perhaps save those till the end. Let's just share my screen. I just have to take my second screen out. I think it's popping up on the other screen. Okay, hopefully you can see that now.
We've got it, Ruth. First slide. Yeah. Brilliant.
I'm just trying to get rid of the bits that I can see on my screen that are blocking up some of the slide. So the first thing we're going to cover is the fundamentals of good accounting. So the legal requirements, why we have to do it, talking about the income and expenditure account, balance sheet, keeping good records, and reconciling to the bank. So first of all, the legal requirements. So limited companies must keep proper accounting records to enable preparation of year-end accounts for filing with Companies House. The accounts must show a true and fair view of the profit or loss for the year and of its state of affairs or balance sheet at the end of the year. So that's a Companies Act requirement. If you're any kind of limited company registered with Companies House, then you have to do that. And the company is fined if they don't do it. And if you're a director of the company, you are personally responsible for doing that, for making sure that the company do that. You can delegate it, but you have to make sure that that's covered and those accounts are filed with Companies House. If you're not a limited company, you still need to keep good accounting records to complete your own tax return if you're doing it as a sole trader, probably for reporting to funders, and to have a good understanding of how your business is doing. Hopefully that goes without saying. Proper accounting records really means details of all the movements in and out of your bank accounts and petty cash accounts, and keeping supporting documentation to back up all the transactions. If you do, once you've done that, everything else can be built from there, but that's sort of the foundations really of what you need to do to ensure that you're able then to prepare those accounts for Companies House or for your funders or for yourself. It also means being able to list all your assets and liabilities at the end of each accounting period. So just making sure that you know exactly what is owed to you and what you owe to other people. Companies are required to keep their records for 6 years. Some funders ask for longer than that, particularly European funders can ask up to 10 or 11 years, which seems very onerous, but they do. And I was looking at a funding application yesterday, and they were specifically saying 7 years. And just to say, nowadays, that doesn't have to be paper. Mostly the accounting records for the companies that I deal with, it's all digital copies that are held on the computer. So what is your profit and loss, or your income and expenditure? That's the same thing. We tend to use income and expenditure accounts for social enterprises which are not for profit. So it seems a bit of a contradiction in terms to have a profit and loss account, but it's the same thing. Not for profit doesn't mean that you will break even, that your income and expenditure will come to the same thing and you'll come back to zero at the end of the year. You can still end up with a surplus or deficit, you know, surplus being income, excess of income over expenditure, and a deficit being more expenditure than there is income. So it's basically just a list. You start with listing all your income, and then you continue by listing out all your expenditure, and you classify it just to make it more meaningful by cost type. So your labour costs, your farming costs such as compost and seeds, and then your overhead costs, which are things like your insurance, payroll costs, accountancy costs, those types of things. And you'll come down then at the bottom to a net figure, your total income less all your expenditure. And that will be, as I say, either your profit, you'll either refer to it as a profit or a loss, or a surplus or a deficit. And I've just said that already. Actually, the not-for-profit organisations still have a surplus or deficit at the end of each accounting period. Not-for-profit just means that if you've got a surplus, it can't be distributed out to shareholders or members. It has to be retained within the organisation and used to promote the aims of your organisation. Income and expenditure will include all amounts received and paid, but it also must include income which is due but you haven't been paid for yet, and expenditure where you've incurred the liability, you've incurred the expense, but you haven't actually paid it at the end of the accounting period. And that's what the accruals concept is that it's not just about money in and money out. You also have to think about what you're owed and what you owe. And again, that's a legal Companies House requirement that accounts are prepared on that basis. So as well as your income and expenditure, or your profit and loss, you will have your balance sheet as part of your accounts. So while your profit and loss is what's happened during the accounting period, the balance sheet is really a snapshot of your assets and liabilities as they stand at the end of the accounting period. So it's really a list of what you own and what is owed to you and what you owe to other people. So starting from the top down on a balance sheet, it will include your capital or fixed assets. And those are your more expensive purchases. It's anything really that will be of use to the business for a few years or more. So a barn, a polytunnel, or a tractor are perhaps the most obvious examples for a CSA. But it might not be a printer, which is only a few £100s. That wouldn't necessarily need to be classed as a fixed asset. Below this is a list of all your current assets. So mainly that's going to be debtors, people who owe you money. And then it will also include your bank balance and any petty cash balances. Underneath that, we start to show the liabilities. So first of all, the current liabilities, which are amounts which are due within less than a year. And those are the amounts your business owes as part of normal trading. So suppliers of goods, buying in produce, compost, seeds, all those farming costs. And then underneath that, lastly, further down the balance sheet, you'll see the longer term liabilities, which are loans, which are, for instance, loans which are repayable after more than a year. If anyone's had bounce back loans that are payable over 5 or 10 years, they will go into that longer term liability. Or if you've had any kind of loan finance to build a barn, etc., that would be a longer term liability. The net total of all these then comes down to your net assets, hopefully, what can be net liabilities. But if you're in a situation of net liabilities, the company's obviously not in a very good situation. The bottom half of your balance sheet, which is harder to explain, it must balance to the top half of the balance sheet, which is why it's called a balance sheet, and it shows how much share capital or reserves you've got. So if you make a surplus in a year, that surplus goes into your reserves, and it will show on the bottom half of the balance sheet in the next year. We'll have it at the end. We'll have a look at an example, and that might help make that a bit clearer. So keeping good accounting records. So while we might be third sector, not-for-profit organisations, when it comes to record keeping, it really is all about the money. So always start from your bank account, and if you have them, petty cash accounts. We tend to try and avoid petty cash accounts because they are notoriously difficult to keep track of. But I mean, I do understand sometimes people have to have them, so avoid them if you can. But it's about keeping track of all your cash movements, whether it's through the bank account or whether it's through petty cash. So your bank will keep records of all your transactions in and out of your accounts, but as well as that, you need to keep the supporting documentation for all the transactions. So your sales invoices or receipts for all your income, your purchase invoices and receipts for all your expenditure. It's a very simple thing to do, but it's completeness that is the key. It's about keeping all of it, not just the big or the important ones. It's really about keeping documentation for everything. And I've just said there again, petty cash is much harder to keep track of. But if you run a petty cash, you must keep a record of everything in and out, and you need to keep receipts for everything in and out as well. Payroll, if you run a payroll, very often, I mean, at Cae Tan, we use a local firm of accountants to run our payroll, but we still need to keep copies of the pay slips and the payroll reports. And if you are running the payroll yourself, there's a lot of extra reporting requirements to HMRC each time you run a payroll. Doing all the above is the minimum requirement, which will enable you or your accountant to prepare year-end accounts and management accounts, and you'll have covered your Companies Act requirements to keep good accounting records. Are we okay? Do I need to stop at all for questions? Okay, so once you've given that you've kept records of all the cash and bank movements in and out, one of the other sort of part of that fundamental building stone is reconciling your bank. So you record all your bank transactions in and out, and then you have to make sure that your record of the transactions in and out actually agrees to what the bank statement says. So and I think, you know, to say at least every month, even for smaller organizations, because once things are, you know, further down the line, it's harder to remember and it's harder to resolve queries if you have them. So really it's just about ticking off your list of everything that's gone through the bank to the bank statements and what the bank say has gone in and out of your bank account. So coming on to managing finances, you know, this keeping track of your finances on an ongoing basis is part of how you manage the financial well-being of your business, regardless of whether you're just setting up and you're very small, or whether you're a more established business like Cae Tan, which has a lot of transactions in and out, and it is managing quite a lot of different projects under one legal organisation now. So you need to make sure that your members are paying for all their veg, and that you know if anybody is behind with payments or they owe you money. And similarly, if you're transacting with other organisations, keep making sure that you've invoiced everything and that everything has been paid. You need to know what liabilities are falling due and when they need to be paid. And then cash flow is something that we haven't talked about so far. That's not part of your company's house requirements, but obviously monitoring cash flow is a key aspect of managing your business. And just to say that, especially in farming and with CSAs, it's quite seasonal. So this time of year, for instance, with Cae Tan, we've bought in all our seeds and that now, but our growers are going up to their summertime hours. They work more days in the summer than they do in the winter. We're coming into the hungry gap where we're buying in produce, and produce gets increasingly more expensive as we go through that hungry gap. So there's a real sort of squeeze on Cae Tan's cash flow this time of year, and I think that's probably common to most CSAs. So whereas we were talking about the accruals concept with your income and expense account, you know, recognizing amounts as they fall due, cash flow is looking very much about how cash is going to come in and out of your balance at your bank account, and make sure that you're going to have enough cash in your bank when you need to pay for things, basically. So if you're a CSA, staying on top of members registers, regular payments coming in, adding new members, etc., is important, and you need to have a good system for doing that. And whilst you're doing that, just as a little aside, don't forget the GDPR requirements of holding people's personal data. So recording income and costs, there are lots of really good accounting systems out there now, and they're much more user friendly than they used to be in the old days. So you should match your accounting system to your needs and what suits you best. For smaller projects and when you're starting up, an Excel spreadsheet system may be enough. And then when you need to move on to something more structured, then accounting systems such as QuickBooks and Xero, those are not the only two. They're very user friendly and can work on multiple devices, enabling you to create and record info direct from your phone or your laptop, but you will incur monthly subscription costs for those. There are also some very good free invoicing apps, Square and iZettle, which can link into those account software. Little bit on expansion and diversification, just to say, and I think this really applies when you're starting out as well, but also if you're taking a step up to expand or diversify your business model, you need a good forecast business plan, which will include an income and expense account, balance sheet and cash flow forecast. And the key thing is to think about what capital expenditure is required and how that will be financed. And if you're using loans, exactly how those are going to be repaid. If you're diversifying, think how it'll fit into your existing account system. Will you need a separate bank account to keep track of a project separately? Do you need a separate accounting system for that project? And does your project need to develop in stages or steps to avoid taking on too much risk to your organisation? I know with Cae Tan we're getting involved in quite a lot of different things now. We're running training programmes. We've had a salads project within Cae Tan and a second CSA. And our education project is growing every year. So it's just, you know, every time that happens, we need to just be aware of the financial risks and think about how we're going to manage that and how we are going to record all the transactions, etc. Okay, so I'm going to stop my screen share there, and we're 2 minutes ahead of schedule, Anne-Marie. So
marvelous, well done, Ruth. That's fantastic.
Even if nobody understood a word of it, perhaps that might mean I've whizzed through it too fast, because I know when I'm nervous I start talking more quickly.
I wonder, Ruth, I thought it was great and a real whip through of exactly what we said on the tin, fundamentals, managing and diversification. But I just wonder, that's obviously from my perspective, and I just wondered if Augusta and Ross, if maybe we could just hear a little bit from you about where you are, what made you want to sign up for today particularly, and how useful that information was to you, just to start us off with the conversations.
Yeah, sure. That was really useful, actually. I was just about to put my hand up and ask a question when Ruth came to the next slide and started to recommend actually some of the accounting systems that go along with it. And I was actually wondering, with these systems, would you say there's a difference between the financial management systems associated to this versus the inventory management system of what is actual farm grown produce, and i.e. the inventory? Do they have SKUs like like a normal project? How is it managed as such other than two? Does that make sense, Ruth?
Sort of. Are you talking about accounting systems specifically, or?
Yes, like a one-stop sort of app or a system that will manage your inventory from the farm and link it to the accounting system.
Okay, so you actually want to keep track of stock on the farm, is that right? Yeah, that's not something that we do at Cae Tan, or in any of the projects that I work for. I don't know whether, Josh, whether you keep track of stock, do you?
No, but I think there's been an update with QuickBooks that does that. I'm pretty certain.
You can do it within QuickBooks. It's not something I've done, but yeah, I certainly you can use either QuickBooks or Xero to keep track of stock. But no, we don't tend to keep track of what we've got in the field, or even what we've got, even because we do harvest all our spuds and our squash and then store them. So there are times in the year when we've got quite a lot of harvested stock in the barn, but you know, by the end of the year it's gone. So no, I don't keep track of it because I don't think we need to. Tom, you know, has got an idea of whether he's got enough, but that's probably as far as it goes. And we don't put a financial value on that at the end of at our year end at the end of March, because at the end of March we wouldn't have anything very much. We've got seeds growing in the ground, but you know, we're in the hungry gap now. We haven't really got a stock of produce as such.
Okay,
Yeah. Were you talking specifically about the veg, Ross? Is that what you meant, or did you mean sort of other stuff?
I suppose, but it's all about scale, I suppose, and some of what the size of a community allotment grows versus what is enough to sustain, you know, a larger project, and how do you actually manage what is essentially inventory, but it's weight really, isn't it? Yeah. So it is actually much easier to record than I was initially thinking.
Okay, yeah, and it's crop that you're getting into crop planning there. I think you're talking about how much you need to plant, or you've got enough for however many members you've got.
Yeah, that sounds more like it would. Yeah.
Yeah, Tom would definitely be able to help with that. I don't know whether he's done presentations on crop planning that we could refer us to.
We've certainly got a crop planning tool. Ross, I don't know if you've got access to our Google Drive, the CSA Google Drive, but we've got a crop planning tool on there that might be a good starting point. Meggie, could you post a link to that in the chat?
Yeah, I'm going to access that, so that'd be brilliant. Thanks.
And Ross, whereabouts are you on your journey? What particular finance questions, apart from the one you've just asked, were you interested in today?
I suppose the biggest thing I've sort of found for myself is there's so much support really at the minute coming from the Welsh government and local bodies and community groups, that actually it's narrowing down which is the right path to take in a community setting. There seems a lot of help, and it's just basically to understand another one of the avenues that are being provided here today to really. I've got a piece of land identified in Carmarthenshire that we're looking to move forward on this year, and again, understanding the different funding routes now available to us as a community, whether it's done through a community-led housing project or it's done through a community-supported agriculture project, or possibly even a combination of the both. And sometimes if you go down one route, it may cancel another route, and just navigating the funding pots available and the routes really.
I'm muted. I'm not anymore. That's really helpful, Ross. Thank you. So I'm guessing that you know Augusta.
I don't know.
Oh wow! Well,
so Carmarthenshire. I'm also a Carmarthenshire person, but no. The reason I'm here is slightly different, I suppose, in that I'm not exploring options for myself at this point, but I'm representing the Carmarthenshire Food Network. And I'm looking at learning more myself, so we can potentially help our members to access different models and different ways of providing their produce to the market and moving that forward. So I'm just kind of all ears there. And interestingly, I was meeting with a lady called Elizabeth Westaway earlier, who was talking about Bwyd Abertawe. We've just applied in Carmarthenshire to become a sustainable food place as the county, it's nice to speak to somebody in Swansea and the wider area, who is also working their way along that route as well. So that's why I'm here really, and really as a bit of a newbie to just understand how CSAs work, but also about smaller producers who might not be doing things at scale. I suppose this is my question at this point, is how smaller producers not doing things at a very large scale and maybe even surplus to their own requirements, so talking really small, can perhaps come together to, as a cooperative or what have you, to be able to supply to specific through specific procurement avenues. Does that sound a bit vague? Possibly.
It's yes, it's supporting through networks, isn't it? Yeah, yeah. And I think for smaller organisations, for any organisation starting off, I think it's what came through from what Ruth was saying for me was it's very much about getting those systems in place early on. So you've got those, we're talking specifically around finance today. So about getting those systems and structures in place so that you've got the basics down, so that you're recording in a way that's very easy for you, because you need to choose the right software package or Excel spreadsheet for you to cope with as yourself and your organization, so that you've got those systems in place so that you can easily do bank reconciling, you're easily tracking your income and expenditure, that you've got a system that you're doing that regularly. Like Ruth said, if you don't do it at least every month, then you do get lost and you go, oh God, what was that 60 quid for? I can't remember. So if you've got that in place, then that will help you when you're starting to think about forecasting, looking at different scenarios, doing things like Ross is going to be looking at, imagine, looking at different types of scenarios and forecasting those. And I don't know, Josh, if you would say anything about your experience with setting up systems, and whether you Ruth, might say anything about Cae Tan and as well.
Yeah, I actually, Ruth's been really helpful to me as well. I guess it's just surrounding yourself with as many people as you can, really, who have done it before, and just learning from their experience. I sit and help Boyd Abatawi and their Swansea Community Growing Network, and there's a lot of different ones. I'm not about Carmarthenshire, but it's tough because there's so much to do, but it has been really helpful for us just to try and join as many different networks as possible and see the different options and experiences that are out there. And then I guess for us, we've created our own community or network up at the field. So we run a CSA, but we have eight different businesses in shipping containers on the field now, and have formed our own little kind of supportive network on site. And that then helps because each one of those, each project that happens on site has their own community. So I feel like we've just got a overwhelmingly massive, like, wider community, which is just really helpful to tap into for specifics like finance or any sort of resources, you know.
And how did you start, Josh, when you were looking at your income and expenditure and bank reconciling and making sure you've got those? How did you start off doing that? How do you do it now? And do you cash flow forecast and scenario plan?
Right at the beginning, so I helped set up a social enterprise cafe. So I actually kind of stole their community interest company non-for-profit model when I set up Something Good, which was really, really helpful. But it's been a lot of trial and error. To be honest, our vision has changed 3 times in the last 3 years. We feel like it's kind of set now, and it's about being flexible. But I guess I've learned from just mistakes about the importance of keeping on top of it, and not letting 6 months go by without checking your QuickBooks, because then you just got a week of hell afterwards. But yeah, I'm really strict now, so I do it once a week and make sure I just take pictures of every receipt and stuff. But the QuickBooks app's amazing, so I just snap a picture of the receipt when it comes in, and uploads automatically. So yeah.
Ruth, what would you say about Cae Tan when you started up with Cae Tan? How did that work for you?
Yes, we went on to QuickBooks very early, which I think, given how quickly Cae Tan grew, was was just as well that we did. So Cae Tan started year one with about 40 members, quite small scale. The second year it went up to 90 and took on more land to try and grow winter veg. And every year there's been, like a significant expansion. We've diversified into something else. We've started a big education project, or we've started a new CSA through Big Meadow, or one of our trainees stayed with us and started a salads project growing business. So the thing with that is you can be you can feel like you're running to catch up all the time, unless you really are planning for how. And I've learned quite a lot about taking on new projects within one limited company, about, if it's of any size, it definitely needs its own bank account to try and keep it separate, etc. And some of those businesses are even out in separate QuickBooks companies now, and some of them are going to split off from Cae Tan and become independent. So I mean, that's the idea, is that Cae Tan incubates various new projects, but that can be quite challenging. Tom has always got loads. I mean, he's amazing, Tom. He's always got loads of ideas, and he's so busy. He's doing so much. So we're running a training school this year for the first time, which again, it's just keeping on top of things, really. Yeah.
And then I guess that's a lot easier to do once you've established those systems.
Yeah, those basic rules that we've been to applies to everything, from when you're starting out and you're very small, or when you're you're 100,000 turnover, as Cae Tan is now, and you're dealing with lots of different projects. Those fundamental things that we've been through are exactly the same. It's all about keeping on top of all the transactions in and out, reconciling the bank, making sure I know where we are and know what's coming up, really.
And then, of course, once you've got a set of yearly financial accounts, then you can start then your cash flow forecasting then becomes less about pulling figures out of thin air and more about what's gone historically. And the more your annual accounts build, the more you can accurately forecast. Yes,
and the real joy of a CSA is I know how many members I've got, and I know how much they're going to pay each month. So that's why the CSA model works so well, because we've got I think we've got about 85 smalls and 40 odd large shares. We're up to around 130 households with Cae Tan and about 70 or 80 households with Big Meadow. So people do drift away, but we've got a waiting list with Cae Tan, which means I always manage to replace them. So my income is a known, really, for when I'm forecasting for next year. And most businesses would kill for that. They would love to be able to tell you what their income is going to be for the next year. The CSA gives you that. And then the reason you need that is because farming is so unpredictable. Every year, every growing season is different. There's always something goes wrong, as well as things that go right. And they're never the same things as went wrong or right last year. So there are always costs that you didn't forecast. Last year we had our trainees were delayed because of COVID. This year we've got trainees coming from Ukraine and from Turkey who can't get their visas to get here. So there's always things that you haven't foreseen that will happen. It's just the nature of farming. Would you agree, Josh? It never quite goes to plan, does it?
No, I think in our first year up here, we hadn't got the CSA kind of ready, and we grow such a surplus that we try to just sell it at local farm shops and suppliers, and it was an absolute pain running around as soon as you harvested things, trying to keep it fresh, trying to sell, and people were just so unpredictable. And we did 2 weeks of doing it with tomatoes and were exhausted, and it was a nightmare. So I really champion the CSA model so far as being able to plan. I can now we pay a girl, Amy, who runs our CSA, and I can say, look, you've got 20 boxes, that's £800 a month, and that's your salary. And she almost manages it as her own business. So if she's got veg to buy in, that comes out of her own salary, and if she needs to get things she can apply for funding, and I'll help her with that. But it's such a easy model when you look at forecasting and planning. It's brilliant.
And then that's the beauty, isn't it, is that you, and that, yeah, where finance becomes beautiful, because it has to involve you thinking about the business holistic, the business it is, you are, you know, maybe not for profit, and you may be a community interest organization, but it is still, you're still thinking about it in business terms. You've still got to at least break even. And the beauty then is in thinking about all those potential external influences that might help, those that are going to hinder, and applying that to various different cash flow scenarios so that you might be prepared in the future. Would you agree?
Yeah, and I mean, the other thing with CSA, when people join up, we ask them to pay. They pay at the start of the month for that month's veg, so they're paying a month ahead, but they also pay us a deposit equal to 1 month's value of veg. So that gives us some working cash flow, which really helps with those seasonal sort of drains on your cash.
We're slightly coming to the end of the chat. But I did want to have a look at the balance sheet, because I'm not sure how many. Did anyone have any questions on what we've been discussing so far?
I would. Thanks, guys. Great to listen to what you've been involved in there. And in regards to some of the surplus stuff that you've been mentioning, I've actually got involvement with a charity that does a bit of a food bank for veteran-related stuff. And if you've got some surplus stocks that are available, actually, it'd be great to feed that bit of fresh food into their food chain that they currently receive a lot of support from, you know, supermarkets and stuff. But as you can imagine, it's that packaged stuff. There's nothing actually fresh to go along with it. So if that's a possibility, I'd love to have a conversation about that.
Okay, we've got a team of volunteers. Yeah, we've got a team of volunteers, and we put our harvest out on a Thursday night, and anything that's not been picked, and the surplus goes in the middle of the barn. Anything that's still there on Sunday night is collected, and was going to food banks. It's going direct to local families now. So we don't really, we don't really have surplus to give out further afield, but it does. But nothing's wasted. Everything goes, you know, to a good home.
Ross, if you want to send us some information on that, we can as Social Farms and Gardens put out a bigger message about that.
Yeah,
as well. So yeah, just send me an email. I will put my email in the chat if it's not already there. Can we just quickly share the balance sheet, Ruth?
Yeah.
The reason I wanted to flag this up is I certainly know. So if you were, you know, a business making a profit, your bank or whoever you're looking at loans from would look at your balance sheet. Am I correct, Ruth?
Yes, they would. Yes, sorry, I'll just stop that share a minute. Let me just come out of.
But it is also true that funders will look at your balance sheet as well. A balance sheet can tell 1,000 stories. So it's really important that you understand your balance sheet and understand what it says.
Right, let me just get Cae Tan's up on the screen. Okay, so this is Cae Tan's balance sheet, and it's from our company accounts that were filed with Companies House for the last financial year to the 31st of March 2021. So it shows the figures as at 31st of March 2021, and then it's got comparatives which are as at 31st of March 2020. So it starts up here with our fixed assets. So we've got a barn which cost about 10,000 to build. We have got about 6 polytunnels between Cae Tan and Big Meadow, which are in there. We've got 2 very old tractors which are not worth very much, but those are what make up that figure. And this figure here is what's called the net book value of fixed assets. So when we built the barn, which cost around 10,000, 2 years ago, it went in on the balance sheet at 10,000, but every year we reduce its value by £1,000 to write it off over 10 years. It'll probably last, well, hopefully last longer than that, but for an accounting point of view, so we're spreading the cost of that barn over 10 years in the accounts. And what will be included in here is what's left. So the 8,000 less the depreciation, the 10,000 we originally paid for it, less whatever we've depreciated it by. So if we've had 2 years, we depreciate it £1,000 each year. Over 10 years, it'll be down to now to nil, and now say it's £8,000, which is included within there, along with the polytunnels and the larger or capital assets. In here are current assets that would mostly be made up of our bank balances, but there would also be anything that's due from our members that hasn't been paid for veg, and we'd usually have other bits and pieces of money owing to us, perhaps for consultancy work that Tom does, or training sessions such as this that we do. Here's our creditors. So that's all the liabilities that are falling due within the next year. So we, at the end of March, we probably owe some money out for veg that we've bought in. We might owe some money to the people who run our payroll and do our year-end accounts for us. All those types of things would be included in there. So then you have this line, which is your net current assets. So you take your current assets, deduct your current liabilities, and that's your net current assets figure there. Here's your capital assets figure, and then you get this line, your total assets less your current liabilities is the sum of this and this. So it's all your assets less your current liabilities. Creditors amount falling due more than 1 year. Usually that's loans. So if you've got a loan that's repayable, over 5 or 10 years, the amount that's payable after 1 year is a longer term liability, and it will go in there. And it's quite important, when funders and people are looking at your balance sheet, this is what, when you start talking about gearing, it's how much long-term liabilities the company has got that it is going to have to pay out of future profits. Accruals and deferred income, this usually with Cae Tan relates to grant income. So very often we get grant income that is paid up front and then gets spent. So particularly with educational projects, it's very often paid around this time of year, and then it's for work that we will do in the next financial year. So we don't recognise that in income because we haven't done the work yet. So we've got, it's like a liability there really, that's ring-fenced money, if you like. We've got, rather than a liability, we've got a commitment to run an educational project with 5 schools in the next financial year. And so that's money that is set aside to do that. So you can see here, if that's our current assets, a lot of that money in the bank is this money here, which is grant money, which has come in, which we're going to spend next year. So that's why it's important that that line goes in there, so you don't think, oh look, we've got all this money to spend. You haven't, because 38,000 of it relates specifically to grant funded projects and can only be spent on those particular grant funded projects. So the total of all those comes down to our net assets. So that's what Cae Tan is worth at the moment. So that's Cae Tan including Big Meadow and all the other projects, and that will relate to we don't have share capital, we're a company limited by guarantee, so that just relates to our surpluses that we have generated so far in the lifetime of Cae Tan, and all that then gets held within Cae Tan and is used for contingencies, etc., and supporting Cae Tan in times of need. So we haven't had a real disaster yet where we've had to dip into it, but who knows what's around the corner. That's why it's important that you've got some net assets and you've got some reserves behind you as you grow. Right, I'll stop the share. Does anybody want to ask me anything about that?
I think, Ruth, I just wanted to flag up that how it tells a story, that if you've got loads of money that's due in, and you can see that over a period of different accounts, because whichever financial agency you're registered with, your accounts are viewable by people, so people will be able to view them. and just how that tells a story to funders or banks if you're going for loans? Can you just
yeah,
say
I mean, if you are yeah, because there's actually, let me just go back to the accounts a sec. So that's the balance sheet. Further down in the accounts, there's more information. These are the notes underneath those figures. Oh no, they're not shown. Actually, they're not on the, because these are micro accounts, so there aren't. But there used to be. There'd be more information on what made that up, and more information on what this was, what this was made up of. But yes, funders will certainly look. If you've got loads and loads of money in the bank account, funders will be, well, why do you need funding? Or if you've got a huge figure down here, which is owing money that you need to pay out of future profits, they might be saying, well, I'm not actually sure this company is viable, because this history doesn't show that it generates profits sufficiently to be able to pay that figure. So there's all those kind of things that that funders and other people can read from your accounts. That's why you have to publish them. That's why you have to put them on Companies House.
Does that make sense for everyone? Has that been a useful use of your hour? Great. Right, I'm going to talk very quickly. I'm going to round us up, and then I am in my true CSA establishing tradition going to play us out with a song. I was today hoping to give you some survey results. We're doing a CSA survey. Sadly, I can't do that because we've not had enough responses to warrant giving any results out. So I would encourage you to complete the CSA survey. I think Maggie's going to post a link to the survey. It's asking questions which we have asked previously around the size of your site, the size of your growing area, how many households that you feed, your waiting list for membership, and so on and so forth. And it's so that we can build a picture of the sector and look at any particular trends or any growth in the sector from year to year. So I was hoping that we'd have enough to look at some trends now and then look again in June. And I think we're just going to have to do a bit more of a push. But please, I would encourage yourself to fill it out if you've not already done so. And if you have any other CSAs that you know that haven't filled it in, probably likely that they haven't filled it in, please would you encourage them to do so. So Maggie's just popped that in. Finally, please would you fill in this event evaluation form, which I'm posting a link to now. If you could fill that in, that would be really helpful as well. Just let us know what you thought about today. Oh, I know Maggie's posted links to our emails in, but I'm also going to post that in. It's also got my telephone number, which I'm very happy for you to use. Quite often you can say things very quickly in a telephone call that will take 27 emails to sort out. So please do feel free to use that. Our next session is members, recruiting, managing, involving, increasing, sharing. It'll be a bit like today. There may not be a presentation. We may just have it more chatty. So I hope you've enjoyed the session today and found it useful and made some contacts. And please do get in touch with me. If you want to sign up for our newsletter and you're not already for the CSA, then let me know. Unmute. Let's show our appreciation for Ruth today. Thanks very much, everybody. And I've got a song for you. I had lots of fun trying to find this, so I'm going to play us out with a song. Hopefully you can hear it. Enjoy your day. We'll be hanging on for a bit of a chat. Maggie, can we catch some of the song in the recording and then we can stop recording? Great. Can you hear it? Excellent. You got money.